Hello everyone, welcome back to another video. My name is Adam, and today we're going to be talking about Alibaba, and there has been some concerns recently over Alibaba, and I believe those concerns, they're not unfounded, but I think there was an overreaction, okay? And because of that, I bought 10 shares. This is my biggest investment as of yet. As we can see here, book cost Canadian was $3,046. I bought 10 shares, and currency conversion was cost per share was $304 Canadian and 62 cents. As we can see on the day, we're up 5%. Overall, I'm just up $15. But that's not what I'm going to be talking about. Today, I'm going to be going over the recent news on Alibaba and especially their founder and what's going to happen going forward, okay? And the main concern right now is that investors are getting antsy over the whereabouts of Jack Ma, which is Alibaba's CEO, okay? And this is a question many in the business world have been asking this week. And so the billionaire founder of e-commerce giant Alibaba and its fintech affiliate Ant Group, by the way, Ant Group, their IPO was postponed, mainly due to probably Jack Ma's outbreak against the Chinese regulators on finance, okay? So the billionaire founder has not made a public appearance since he gave a controversial speech at Chinese Economic Forum in late October. In that surprisingly aggressive speech, Ma criticized Chinese regulators for throwing a wet blanket on innovation in the financial sector. Okay, and so on November 2nd, a few days after the speech, Ma was called in by authorities for questioning. Ant's IPO, which was expected to be the largest in history, was nixed in the next day. And also Ma missed an appearance as a judge on his own Shark Tank-esque TV show last week. And that raised eyebrows and turned into raised alarms, okay? And so, he could be sipping tea on a secluded beach for all we know. But, he's probably laying low given his recent run-ins with Chinese authorities, right? And then investors are starting to get antsy. And I mean, yesterday the stock fell over 3%, okay? And as we can see, it's up today by about 5%, which we're going to discuss later. And I'm going to be talking about, again, like what's going on aside from this, why I'm so heavily invested in Alibaba. Again, it's my biggest holding and why I believe on this company, okay? So as we can see here, right now, Alibaba is up by 5% on the day, but it's been kind of a wild ride for even like the past 6 months. We can see it peaked around $317 and since then it took a downturn to about 24%, closer to 25%. And now we can see it had a bit of a bottom here and now it's rising slowly up, okay? But again, there still is a lot of concern over what Chinese regulators are going to do over Alibaba, okay? And here, I just want to take a look over why I'm so optimistic first before I introduce all the negative news, all right? So here we can see the revenue estimates for the current quarter of December is 63% year-over-year growth, okay? In March 2021, 67% year-over-year growth. And even current year of 2021, they're expected to grow 47% revenue growth versus last year. And finally, next year, they're expected still, double-digit growth of 30%, okay? Despite this stock is valued as honestly a value play, okay? They have a trailing PE of 31, which is, trailing PE doesn't tell you that much about future earnings, but their forward PE is 17, which is incredibly low compared to, the Google, the Amazons out there, right? Shopify, right? They have PEs which are just off the charts in the hundreds, okay? So this is a very, very, value play. It looks like a value play, but in fact, it's a growth beast. As I just showed you, analysts have them doing 30%, okay? The flip side to that is, I'm going to introduce one now, is, okay, if Alibaba gets regulated, then instead of having 30% growth, they'll have, I don't know, maybe 10% growth. However, I don't think the Chinese Communist Party, I think the most they're do is going to, give Jack Ma a slap on the wrist and show who's really in charge, to establish that power. However, I don't think it makes sense for them to stifle Alibaba's growth since it's one of their main players that can show, look at Alibaba. This is our main e-commerce giant. And yeah, it can compete with the likes of Amazon. Okay, and I mean Alibaba is not a small company, right? This is a stock. I think I had it right here. That like its current valuation is 648 billion, and this represents only a 17 forward PE ratio, right? So it's not a small company, all right? And I mean its revenue proves that, all right, which we're gonna get into a look at. Okay, so first let's just take a look quickly at the chart. So this is a 3-month chart. Right now we can see Alibaba is up 4.74% on the day as of 1:54 p.m. Eastern Standard Time. Here we can see again this significant downtrend from $317 all the way back down to $222. That's when it hit its first bottom. It sort of tested that a little bit at $227, but then again, it's bouncing off that again. We can see the indicators, relative strength index, we can see it's 42. So sort of more towards the oversold territory, and MACD is suggesting highly negative. MACD at around -9 or even negative like 11, which suggests that there's significant downward pressure. However, we can see a slight sort of uptrend in the MACD, probably going to cross this moving average here, which is definitely a bullish indicator. Okay. And I mean, again, if we're looking at Alibaba, no one really wants to short this stock. We could see short percent shares outstanding is only 1.52%. So this indicates again that there's not much short pressure. A lot of movement is going actually into the stock as of late, and I believe it has significant upside. And again, that's why I put so much money into this stock. Okay, so let's look at some of the news. Okay, so again, the main news and the main piece of concern is that Jack Ma is most likely lying low. He hasn't been seen publicly in 2 months following China's crackdown on the company. Okay. And part of that is, if we're going on to another article, is again, Chinese regulators set the brakes on Ant Financial, which is Alibaba's sister company, which planned a record-breaking IPO. Okay, and so the regulators have now made a list of requirements which Ant must follow so the IPO can get the go-ahead. Okay, this include improving transparency. Exactly, you could pause and read more if you would like. Okay. Oppenheimer analyst Jason says the list suggests the IPO seems unlikely in 2021. It'll likely take Ant some time to meet all 5 regulatory requirements, especially the reserve capital requirement, et cetera, et cetera. You can again read more there. And he lowered Ant's valuation from 200 billion to 150 billion. Okay. And he also believes that BABA shares are undervalued. By the way, the ticker symbol is BABA. The analyst reiterates an outperform buy rating on BABA along with a $320 price target, which of course we can see right now. Alibaba is $239 almost. And investors stand to pocket a 40% gain should the analyst thesis play out. Of course, analysts are not always right. Neither am I. Again, do your own research. But I do believe that this is one of the lower risk stocks you can play in, and also it gives you exposure to the Chinese market. Okay, and you can. I'll link this article below about what this analyst is saying here. Okay, so the Oppenheimer analyst is not alone in claiming BABA remains undervalued. The overall sentiment is decidedly bullish. All current ratings in total consider the stock a buy. To this end, BABA's strong buy consensus rating is backed by a 342 price target, suggesting gains of over 50% over the next 12 months. We'll have to see what happens with the regulations. Again, I decided to get in early because I believe that, again, China does not want to stifle Alibaba and, look bad for now even more American investors won't want to invest in Chinese stocks if there is, a significant regulatory hurdle for e-commerce giants like Alibaba to overcome. So I don't think the Chinese government wants to do that. Okay, so I'm definitely placing a bet saying that the Chinese government, it's going to slap the wrist of Jack Ma, but I don't think that it's going to impose severe sanctions that's going to severely limit the growth of Alibaba. Okay, so again, I'll link this article below, and again, there's a bunch of links down in the description that you can check out for more free resources. I appreciate you watching this video. I just want to end off on a quote. So, Isaac Newton, he invested in the South Sea bubble, and he was like, I can calculate the movement of astronomical bodies, but I cannot calculate the madness of men. Okay, and he lost a significant amount. I believe it's like 20 million in today's estimates by investing in the South Sea bubble in the 1700s. Okay, so I'm just saying, be careful. Just like a stock can shoot up, a stock can also shoot down, and fear is as contagious as greed. Okay, so just be careful with your investments. I believe that this here Alibaba stock, this decreased by 25%, down here by like 30%, was way overblown, and I took advantage of it, and I think it's going to come out because again, I stand by the quote and I'm steadfast in these investment decisions. But anyways, let me know what you think of Alibaba, whether or not you were buying into this stock, and I'll see you guys in the next one. Take care and have a good day. Love you all.